Hi, and welcome to the Stock Scores Market Minutes for July 3rd, 2017. My topic this week, your last trade doesn't matter. Of course, I'll have my regular weekly market analysis and then the trade of the week, a day trade on NXTD. All right, most traders often, or not most, many traders often judge their approach to the market by the result of their last trade or their last few trades. They'll see something that worked that was maybe a break of their rules, and they think that that warrants changing their rules. Or they see a stock that they missed that was a very profitable trade, but it didn't satisfy the rules, so they try to then alter their rules. To draw conclusions on the effectiveness of a trading rule requires a large data sample. You can't change or define your trading rules based on what just happened or on what happened over a small number of trades. You can only make conclusions once you have looked at the data from many trades across different market conditions. What happened on your last trade doesn't really matter. It's what happens over a large number of trades that proves whether you are trading effectively or not, and whether your trading strategy has rules that work or not. All right, let's get into this week's market analysis. We've seen a little bit of a pickup in volatility. The last few days there, we first had a little pullback there, and then we had some more weakness on Thursday and on Tuesday. So we're starting to see a little bit of motivation by the sellers, very short term. So you can see here we've got some falling tops building. That is a sign that the sellers are getting a little more motivated. Very short term at this point. Keep in mind that this is a 30-day, 60-minute chart, so it's just early, but I think it could develop into something. When we look at the long-term trend here, of course, we still have our upward trend well intact. We've got the more medium-term trend line right there, which we're just touching off of this week. So we've had very low volatility. That's been the story for the month of June, and now we're starting to see a little red pickup, and maybe we lead to a downward move in the market. So no breakdown yet, just a word of caution at this point, but something to keep an eye on. On the the small cap stocks, the Russell 2000, we are in an ascending triangle. You can see there, and we don't have a lot of volatility over here, so we just need the breakout. And it could be that we will get a rotation by investors out of the large cap stocks, which is what the S&P 500 represents, and perhaps into the small caps. And I have seen a pickup in the action in the lower price stocks lately. There's been a few good movers in the last couple of weeks, and I think that could continue. One of the reasons, of course, is the improvement in the biotech area. Now moving along to the Canadian market, again, this is the short-term chart, and we've talked about this the last few weeks, the pessimism that has been building, and we had some selling pressure again to end the week, bringing the market down to some support, but you can see that we've basically got a descending triangle. We had one breakdown here, and then that built new resistance, and now we're testing perhaps this low to break down again next week. Not a breakdown yet, but the trend, if you will, in the short term is down. Not really down, only slightly down, so I would call this sort of neutral to slightly bearish. Now looking at the longer term chart, you can see that we're building these falling tops, that we are now moving through this support zone. We just closed below it this week, so that's also a bit of a negative, and I think there's a better chance that we move down here than we do to move up to here. So I want you to be cautious with Canadian stocks. TSX Venture broke down through support this week as well, and you can see there again falling tops. That's pessimism. There are no rising bottoms on this chart in the last few months, and that points to more weakness ahead. Now the way this has been going is we get these down waves. We've had a pretty good down wave already starting here, so we may get a little upward move and then a rollover and continuing that downward trend. Until the downward trend line is broken, I want you to stay relatively cautious with the TSX Venture. Russell 2000, the 20-year bond ETF, TLT, started the week strong, but actually sold off quite significantly through the week. That is a bearish engulfing candle. What that means is that the high is above the high of the previous week and the low is below the low of the previous week. That is the engulfing part. Bearish because we closed the week below where we opened, and that is a somewhat short-term negative signal. I wouldn't call it critical, but the upward trend line is still intact there. If that gets broken, then we need to worry a bit more. I think that this is a slightly optimistic chart still because we have broken the downward trend line, and we did that after consolidating here for a while, and maybe we're just going to see some short-term profit taking in the bond market as it has rallied over the last couple of months. US dollar had weakness, and that's probably part of the story in the TLT. You can see that we've got a falling top, downward sloping channel here. We're kind of at the bottom of the channel, probably have another down week before it bounces, but the general trend for the US dollar is lower, and we've got some support down here. I think we kind of gyrate down until we get to that support. All bets are off on that negative outlook if we can break the downward trend line, but it's not going to happen next week, at least I doubt it, so remain relatively pessimistic on the US dollar. Gold is kind of stuck in this narrow range. You can see it's building a pennant pattern right now, and that is just cycling in and out of that rising bottoms and falling tops. But the outlook here is really kind of a dead, quiet market. It's condensing in volatility, and that means investors are sort of building confidence about what they think gold is worth, but not really optimistic or pessimistic. Now, U.S. oil in general has had a sharp sell-off. We all felt that, and we're down to the bottom of the channel where I said it would bounce, and it did bounce this week. However, the upside is relatively limited to the top of the channel, and so don't be surprised if we have a few more up days and then get stuck there and continue this cycle of falling tops. So I remain relatively pessimistic on oil longer term, although short term wouldn't surprise me if we see a little more upside. And on to the fear chart, the VIX. We had a pop this week on Thursday when the market sold off, and it went right back down again. So that's kind of been the story with the VIX for some time. Eventually, the market will correct, and eventually the VIX will be a place to be a buyer. But these short-term little pops, they tend to fizzle out. So I want to see something a little more substantial. So ratings then, U.S. market, long-term bullish. The upward trend is still intact. Neutral short-term because of that little bit of weakness. Bearish on both time frames in the Canadian market. Gold, neutral on both time frames. And oil, I remain bearish on both time frames, but I do think in the short term you could almost go neutral here because it probably has a few more days of upside before it gets stuck at resistance. There's that short-term downside volatility has increased for the U.S. stocks over the last week or two, and that increases the chance we will see more of a pullback in this area. Still no real strong sign of a correction since the upward trend line remains intact. Canadian markets continue to lag the U.S. markets, but with oil making a bounce, maybe we'll get a little support into the Canadian market against its pullback in the next week or two. Still has lots of work to do on oil because of that bounce. I wouldn't get too excited. There is limited upside until it hits resistance. Gold is stuck in that sideways range, and fear remains low, but there's a little percolation of worry there in the market that could turn into something. All right, let's get on to the trade of the week. This was a day trade that I did on Thursday. It got on my list because of the abnormal action, which was sort of highlighted by these pink dots. That's my action candle indicator. My entry signal came right there. I can't really see it, but there is a white dot there. That is something I call a message candle. It is one of my proprietary indicators that I've created for TradeStation, available to my active trader students. That's what pinpointed for me the entry on this trade. I held it till late in the day, and it had a very nice gain moving up, closed the day at just a little better than 13 RR. Now, I'm often asked, when do you want to hold these things overnight? And my general answer is, if the market goes parabolic into the close like this did, it's not a good idea to hold until the close, because that's often caused by emotion, either the fear among the short sellers and they have to all cover at the same moment, or the buyers just feeling like they're missing out. Either way, it's a fear of missing out, or the fear of getting crushed further by the shorts. So those situations usually don't resolve with higher prices the next day. If they're going parabolic into the close, I am inclined to take my profit at the close, and that was a good move on NXTD if you look at what happened on Friday. All right, well, that's been the Stock Scores Market Minutes for July 3rd, 2017. Hope you enjoy the holiday weekend. Have a great week in the market, and trade well.